So in today's section, we are going to explain reversal. So I want us to follow the order of the framework. In the previous session, I mentioned that we are going to explain retracement today, but let's follow the order of the framework because this is how price moves from expansion to reversal, then from reversal to retracement, or from expansion to consolidation, then from consolidation to expansion. This is exactly how price move using the framework. All right. So now this is an example of our expansion from this point to this point. Here is an expansion in an uptrend, right? So price now pull back down to this point here. So this pull back that we have from this highest point to this lowest point here is what we call reversal. Price reverse down, right? So this is an example in a downtrend. Price expand from this highest point to the lowest point here, then pull back to this point here. So this pullback that you are seeing from this lowest point to this point here is what we call reversal. Then after reversal, price now continue to sell down, right? So I'm going to explain market structure. So from there you understand all these bullish and bearish trends. All right, so don't really worry much about the trends now. So this is what price respect when the price reverse. These are the order flow price respect, and I'm going to explain this order flow one after the other. So the first order flow is liquidity sweep, then the second one is fair value gap, the third one is breaker block, and the last one is order block. These are the four major order flows that price respect anytime price move opposite direction of the current trend. What I mean opposite direction of the current trend is price was moving from lowest point to the highest point, then it pulled back, which is opposite direction of the current trend. The current trend is where you have your expansion from. Then this one, from the highest point to the lowest point here, you have your expansion, which means price is in a downtrend. So when price move opposite direction of the trend, which is this pullback that we have here, we have a reversal. So this reversal, there is an objective that the reversal want to achieve, and that objective is these four order flows. Is either price is going to sweep liquidity, or is going to fair value gap, or is going to breaker block, or is going to order block. And I'm going to explain each and every of these order flow in this video. So let's see it on chart. Look at it here. We have our expansion, price pullback to where? To this fair value gap. All right, price pullback to this fair value gap. So what is fair value gap? I'm going to use this block to explain fair value gap so that you can understand better. So let me show you example. Let's say this is the wick of block. This is the wick of block A, right? Then this is the wick of block C. This is the wick of block C. So the gap between the wick of block A and the wick of block C is what we call fair value gap. Let me mark it so that you can see. So this is the gap between the two wick, right? This is the gap. So this is what we call fair value gap, right? Look at it. This point and this point. So these two gap is what we call fair value gap. And usually the block B, which is the center one, the middle one here, used to be long. All right, for you to have a fair value gap, that particular candle used to be very, very long. Okay, so let me show you a very practical example here. Fair value gap. So let me give you an example of fair value gap right here. You see this red shade, that is what we call fair value gap, and this red shade indicates the space or the gap between these two candles, this one and then this one, it indicates the space between the two candle from their weak point. Let me zoom it very well. From their weak point, this is the wick of this candle, and then this is the wick of this candle, right? So the gap between them is what we call fair value gap. Then look at another one. This is the wick of this candle, and this is the wick of the next candle, right? After the middle one, usually the middle candle used to be more longer. You understand? It used to be longer. So the gap here is what we call fair value gap, right? So don't worry, I'm gonna show you the tool that you can insert, which will be showing you the fair value gap automatically. But now the main thing here is for you to understand what is fair value gap, which is what I showed you right now. So we have a bearish fair value gap, which is red in color, and we have a bullish fair value gap. Let me show you a bullish fair value gap, which is the green color, right? Okay, this is the bullish fair value gap, green color. Like, see it here. You see, we have this long candlestick. Then the candlestick before that long one, the wick of that candlestick, which is this one here. Let me zoom. Look at it. The wick, this point here, and the wick of the next candle. It could be bearish, it could be bullish. The color doesn't matter, right? So what really matters is the wick. So after we have this candle, the next one is the long one. Then the next one is this particular one, the wick of that candle, which is this point here. So this space that we have is what we call fair value gap. Look at it. This space we have is what we call fair value gap. So this tool that I'm using show me fair value gap automatically without me drawing the fair value gap manually. All right. So I'm gonna show you how to get this tool and put on your trading view so that you'll be seeing the fair value gap automatically. All right. So this is one of the order flow, the institutional order flow, right? Fair value gap. Then now that you know what is fair value gap, the next thing is what is I think the next thing is breaker block, right? Okay, liquidity sweep, which is the first one that we would have explained, but we'll move to the fair value gap because I can easily see it on my chart. So that's why we explained that one briefly. So what is liquidity sweep? So liquidity sweep are points where buyers or sellers put their position, right? Uninformed traders, they normally take entry from the liquidity zone, all right? So when you have a pullback, is either price pullback to sweep that liquidity, or a pullback to the fair value gap, right? Or a pullback to breaker block or order block, right? So now let's look at a very simple example of liquidity sweep. Okay, look at where we have this pullback, right? We have this pullback here, pull back to this point here, come down again, pull back again, then come down again. So these 2 points that you are seeing, this is what we call liquidity. But what price does finally? Price finally pull back above these two internal points, right? To sweep that liquidity, because when price get to this point here, there are traders who execute sell from here. When price get to this point here, there are traders who execute sell from that point. But later on, price pull back to sweep them out before the actual sell movement started. Right. So that is what we call liquidity sweep. All right. Let me show you another practical example. Very clean example. Okay. Look at this, our previous order block that we explained. Look at this, our order block, right? So what does price did here? When price get to the highest point, which is here, he pull back. This was a fake reversal, price pullback, right? So that is what we call liquidity. Fake pullback is called liquidity. After the fake pullback, the actual pullback will start. Or after the fake reversal, the actual reversal will start. And I say that when price is reversing, it's either reversing to sweep a liquidity, or is reversing to fair value gap, or is reversing to order block, or is reversing to a breaker block, right? So now look at this practical example. Price reversed to this point, created or engineer liquidity. When price engineer liquidity, then he retrace. Then after that retrace, then he finally pull back to this point here to sweep that liquidity. So this is what we call liquidity sweep. This is what we call liquidity sweep. All right, this is what we call liquidity sweep. So this zone here is a liquidity zone. This zone that I put my trend line here is a liquidity zone, which price later come down below it to sweep that liquidity, because when price get to this point here, there are traders who put their buy position there, because they thought when price get to this point, it will start buying, right? It will start buying from there. And you can even see the manipulation here. When price get to that point, it started buying, right? Started buying. But what happened later? It pulled back down below that point. Kick out all the traders that opened their position at this zone here. So that's liquidity sweep, all right? Then get to this point here before another movement started, right? So that's liquidity sweep, all right? So now the next thing is what? Breaker block. So what is breaker block? Okay, breaker block is a fail order block. Yes, it's a fail order block, right? That's a breaker block. Fail order block. So if price is pulling back or is reversing, is either going to a breaker block or one of these other flows that I explained. So how do you identify a fail order block? So let me show you a practical example, right? So look at this point here. Price come from this up here down to this place, then from this place move up here, then come down here again, then go back up again, right? Then come down here again before the actual movement started. Price get to this point here, right? So it started selling down. So we expect this sell to continue like this, but what happened? Price refused to sell down, get to this point again, then come down again. We expect it to continue to sell after coming down, refuse to come down, then later price expand above what? The recent internal highs. Above the recent internal highs. These are the recent internal highs. Look at this point. These 3 points that you are seeing here is the recent internal highs. Okay, these are the recent internal highs. This point, this point, this point. Because at this point, price push down, price push down, price push down, and later price go above those points. So those internal points are order block, but those order block that are supposed to push this price down to continue selling failed, right? Those points failed. So then there becomes a breaker block. And that is why you see price come from this highest point here after expansion back to this point here to what? To retest a breaker block. This point that are inside here that you are seeing, they are breaker block. So let me give you another example so that you can understand. You see this point here, price come down here, right? Right? Then from this point, price started buying, started going up. So it created order block here. Why? Because when price come down here, it started buying. But later on, price go down again to break this order block. You understand? So when this order block was broken, It is no longer a valid order block. It has become a failed order block. So then we call it breaker block. A breaker block is a failed order block. Look at another example right here. When this price was expanding to the upside, it was creating internal liquidity, right? Internal liquidity. Look at it. You get to this point here, come down, go up again, come down, then go up again. So all these ones are failed order block because when price get to this point, it started selling, but later push up above that point that price started selling from. So this is a failed order block. When price get to this point again, started selling down, then later failed, then continue to buy. So this point here is a failed order block. This is where price usually come down to during reversal. When you look at this structure, we have our expansion. So after this expansion, price reverse to where? To this breaker block here. So this is the objective of this particular reversal here, a breaker block, which is this point, right? Which is this point. And after price pull back and retest this breaker block here, what happened? It later expand. Look at it here. Price expand from here to this point, right? So let's go to the next one. Don't worry, gradually you understand all of these things. Now this the next one is order block, right? Order block. So let me show you a practical example of order block where price pull back to an order block. So this is another example right here. I think I explained this previously. After this expansion, okay, after this expansion, price pull back, reverse back to the order block that give us this expansion. Reverse back. I used this example in the previous session, right? So price pull back to the same order block that give us this expansion, right? So now look at another example again. After we have this expansion to the upside, price pull back to the order block again. I marked this order block in the previous session, right? So price pull back. Look at where price pull back to this point here. So do we have breaker block? Do we have fair value gap before price get to this point? Yes, we actually have them, but price ignores those other flows and respect this last order flow. There was fair value gap here before price pushed down, right? There was fair value gap here. This is a practical example of fair value gap. There was fair value gap here this week. Then we have this long candle, and this week the 2 week does not overlap, so there is a space. So before price pull back or reverse to this other block, there was a fair value gap here, but price doesn't respect that fair value gap. Now again, we have a breaker block here. Remember, this is a breaker block here, right? Because when price was going up, it got to this point here, then started selling down, and then later this point failed. This our other block here failed because price push above it, so it becomes a breaker block. So we still have this breaker block here, but price refused to respect these two order flow and come down directly to the order block. So this is where traders really get it wrong. You understand? This is where they get it wrong. They don't know which of these order flow price respect and why does price choose the order flow. This is how you build a strategy by looking at the chart, then understand the objective of price action. If price is moving down or is moving up, where is it going? It's going to one of these four order flow. So now you either decide to pick one of these order flow and study it well, then master it and know why price respect it. Or you keep jumping from one strategy to another, because most of the strategy that you are using to trade, they don't break down market structure for you based on price action. They just simply tells you when to buy and why you should buy, but there is no a breakdown of price behavior. There's no breakdown. So if you don't understand price behavior, you can't know why price react, why price change direction, why price respect one order flow and reject the order flow. I guess in my point right here. I think we're gonna stop here. So subsequently, I'm gonna explain why price decide to respect fair value gap instead of breaker block, or why price decide to respect order block instead of breaker block, or why price decide to just sweep liquidity and start going or continue in the bullish direction or in the bearish direction, depending on the directional bias that we have initially. So gradually, you're gonna understand all of these things. But right now, you are dealing with the framework. You are dealing with the framework which reveals the narrative of the market. So, and we are using ICT concept so that you can easily understand the behavior of the market, right? So, see you in the next session.